You want me to share my screen?
Oh yeah, hold on just a minute here. Good morning, everybody. Yeah, I'll just go through the intro, Tyler, and then we'll get started here. Yeah, you can share your screen right now, and then I'll get to it. All right. Good morning, everybody. Yeah, welcome to the Pro Trader webinar series for today, Tuesday, 10 a.m. Today we have Tyler Wilson. This is his first time here, so welcome. And he's going to be going through stocks and options and how he uses Bookmap to optimize his trading within some of his levels that he's looking at here. A little bit of background. He's been investing for the past 5 years. He started trading in futures and crypto and then slowly moved over to equities. His specific field is options trading, and for the past 2 years, he's focused on growth stocks, but now shifted toward commodities. Uh, um, he studied finance at Bauer Business School at the University of Houston. He has 30,000 traders following him on YouTube and roughly 10,000 on Twitter. He's also built a self-sustaining Discord community of 4,000 investors. I have his contact information here if you guys are interested. I will be placing this into the chat so you can use the links directly there, but you have a podcast, his Twitter, and his YouTube. Got to go through the disclosures, and then we'll turn it right over to Tyler. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so let me get going here with Tyler and get his screen popped out and ready to go here. Okay, I think you're good. Can everyone see Tyler's screen there? Yeah, looks good. Okay.
All
All
right.
right.
So basically, when Bruce approached me, I've used Bookmap in the past, primarily when I was trading futures and just commodities and futures, and then I made the switch over about 2 years ago into options, just so I had a healthier schedule. Because if you trade futures and commodities, you understand those markets are a lot more time consuming, specifically because you're trading more hours of the day. So the structure of how I use Bookmap, a lot of people use price action or the word price action, or I throw that out there loosely, but I like to say it's more based on reactions. And if you're using Bookmap, in my opinion, it's a great tool to find those reaction levels, right? So basically, in simple terms, I'm using price action to locate those key supply and demand zones, which we're going to go over in two trades that I used, and this is the past literally 7 days that I've been trading. So I have one was yesterday on Moderna, and then the other trade will be Lucid. But those are two trades literally just took. And I actually posted them on Twitter as well. The other trade will be Lucid, just so there's no like BS or anything there. And so it's how I'm choosing these plays doesn't necessarily have to do with Bookmap, but I find my plays based on either fundamental viewpoints or some sort of shift in the way the market's moving. And then I use Bookmap to narrow down and really zone in on the best entry and exit for that trade. I think that's where Bookmap really separates itself, right? It's not going to tell you really what to buy, but it's going to tell you kind of a good time to sell and a good time to buy it. That's how I use it, right? And so it's going to show you that strength and the overall weakness of key zones and for continuation or just getting out for targets, right? So the first one we're going to use is going to be Lucid. And so this is going to be a chart for the first one because it's going to be hard to follow from just using the Bookmap chart. And so I'll show you what I was looking at. So if we come in, you should be able to see my mouse. I wish I could highlight it a little bit, but I got in right here, this red line, which represents the monthly level for Lucid. And what Lucid had going on, they had a recall on their vehicles. They're already a small production as it is. So they already had a recall, and then they also had a pretty bad earnings. So they already had a pretty nasty drop, and I was looking for a continuation to the downside, but I was just waiting for this to play out. They were making higher lows. They broke below, and they broke that monthly. So that's when I started to enter. It was roughly 24.50. And then I go over to Bookmap, and this is where you really start to see kind of what's going on with the tool Bookmap gives you. So you can see going back here, you have that straight. It's the same chart. It's just going to be, again, it's going to be a little bit rougher to look at just because it's not as So there's a lot more going on with the Bookmap. So when you come over, you can see you're still making those higher lows, right? But then you start to break back down. And when you start breaking down, you can see you come and test that zone once at the 24.23. You can see 23.98 right there. Roughly, it might be able to zoom in, I can't. So you can see 23.98 right there. And you see it test and it bounce. And so when you come back, I'm going to keep coming back and forth, so it's going to give you just the overall best way to look at this. So you saw that first one was right here. This is where you get that first bounce, and you came back up and you came back down, right? And so when you come back down, I'm still in this trade at this time just because I have very great confidence in one, that you haven't got back above 24.5 and you have come down and retested it. And so you also will see when you're coming down, it'll start to eliminate those zones. And once it really starts to eliminate those zones of support, that really makes you start moving on to the next key zones. So the ones I was looking for, and I'll kind of ignore these smaller levels here unless I'm really getting into scalping, which isn't necessarily how I focus on. I'm looking for more, maybe one, maybe two trades a day. I'm not looking to overtrade or anything like that. So when you're coming down to the downside, I'm targeting this 23.76, but ultimately the goal is going to be about 23.6 to 23.5. And you'll also notice with Bookmap, when you're coming to those key zones, you might get a touch a little bit above it. So they'll pull you down to that liquidity, but they won't necessarily let you hit it. And this is just something personally that I've noticed. So I'll have a loose target, right? And so when we come back over to the next the slide, that's what you always see me marking out zones. So if you follow me, if you've seen any of my stuff, you always see I'm talking about blocks instead of a specific line. So very rarely am I going to set just a specific line target like this, right? So this is just an overall key low that I had from months back. That's what I'm watching there for just a massive break to the downside. I'd immediately get out there. But going here, so you have to kind of price that out for yourself. And I think that's where a lot of traders get dumped at, is they have a key range. Well, if it hits 23.58, that's where the liquidity is. That's where I'm going to get out. But in reality, you're going to have mix-ups, and there's going to be a lot of times when you look at charts, you're like, well, I hit 23.6, right? 2 cents off, right? And it'll miss your overall level. So I'm pretty conservative when it comes to taking profits and getting out of trades as well. So I'm never to the point where I am like, it has to hit this zone specifically. I'm monitoring how much I'm gaining, how much I'm losing, and then the overall flow of what's going on here. And you'll see these absorption indicators here, which I don't want to go into yet. I'll use that in the other trade. But for Lucid, it wasn't a key factor for me. And so when you go over, you can see you started to lose and those levels started to break down, right? So we can see that 23.7, it ended up moving that liquidity all down to that 23.5 range. And this is another thing you'll start to see is when you're looking at the order books, and this is something that me and Bruce have talked about specifically, that you'll see whenever they'll have a level and they'll just start moving that level down to the next one. And it'll kind of show you the significance of where those levels are. And another thing you can look for too is when those levels, you can come back and see how long they've been there. So we can see this level at 23.5 has been here since you were above 24.50, before we even got into this trade, right? So before we got into this trade, you had a level already at 24 and your 23.5, 23.48 range. So that's going to tell us that this is a very valid level. These are going to be buffer zones where you might get a bounce, but ultimately that's not really what we're looking for, right? This is just an area of kind of smooth selling to the downside, kind of like what you saw right here from 24.5 down to 24 almost in a flash, right? In a matter of 2-3 minutes, just straight down to $24. So that's what's going to play out there, and it's just going to start pushing, pushing, pushing. And so we had that zone about 24.9, and then, like I said, about 23.6 to 23.5, 23.6. Coming over, where I started to get out of it was right here. You see that flash crash literally right above 23.5, which is something I mentioned. You'll see that. You'll start just crashing quickly down. You won't necessarily make a perfect double bottom, but in my opinion, this is forming a double bottom if you're going to get one, right? I think people, they try to make these perfect drawings and cup and handles and head and shoulders, and that's just a lot of I don't trade based on those type of patterns. It's more of, like I said, reacting to how the market is treating the stock and what they're going to give us, right? So if they're giving us that downside push, that downside break, I mean, what really more is another 1 to 2 cent drop to that 23.5 level? You know what I mean? So you can either start trimming or you just start getting out once you start getting really close to that range. Because if you're sitting in an option that's 1 week out or 2 weeks out, on this trade, you're making anywhere from 60 to 70% because you're getting such a volatile push to the downside, and we're grabbing in the money contracts. I don't even want to go into the flow of options or how to buy those set options, because that's where it's going to get confusing for some people. But when you're just looking at the chart, this is how I'm using it. So Bruce, you have any questions specifically about this one, or would you like me to elaborate a little bit more?
Yeah. I mean, no, this is great. I mean, so this is a day trade. This is you're holding it for not long. Just looks like well, basically until it hits your target. Um, but how? Yeah, what is your holding time basically? Because this one played out pretty quickly.
Yeah, so that's a really, so this is a 5 minute chart. So you'll see when you broke below 24.5, if you're counting the candles over, I wish I had a better, I wish I gave you a better time frame on here. So that was about from market open, literally within the first 15 minutes of market open. That retest is when I got in. And then so that was about an hour and a half, hour and 45 minutes. But it comes back down to is something that I'm like just like preaching every day right now is you're kind of adjusting with the market right now to a certain extent of you're not in 2021 anymore. So 2021, you could ride a lot of swings because we were in a clear trend of a market, right? It was, we were just going up and up and up, and you occasionally had your down day or a down week, but overall you were just gaining and gaining. I don't think we had over like 5 red days in a row in 2021, which is kind of insane to think about. We had no real downside. But now, as you shift, I would say the difference really happened at the end of November once Powell basically got re-upped for his position. He changed his stance on Fed rates and things like that, and obviously the market's been taking a downturn since Russia, things like that. And so you're getting to this period of you, in my opinion, have to take more in and out trades. One, because you're getting more volatility, which is good because if you're getting more ups and downs quicker, you're obviously those contracts are going to move quicker. But two, you just don't know what's going to happen the next day, and I think that's proven, right? For example, Sunday night or going into Friday, the market kind of had a little bit of a bounce, and then Sunday night we were futures opened up fine, and then breaking news hits. You have Russia attacking a nuclear power plant in Ukraine, right? And the market reacts very negatively to that. And you start just dropping. You open up Monday morning just with a free fall, and these are just things you can't really predict. So for me right now, I have had to shift my plan from swinging, like I said, growth, like clean energy and things like PayPal, Square, some of these big names that had huge 2021, 2020s, and I've had to move more into catching downside, catching upside. So what you're going to see in these past two trades, right? And like I told you, is like, unfortunately, I couldn't get anything to the call side because one, I just didn't feel comfortable playing against the market. And then two, it's just me adjusting and, like I said, reacting to how the market's moving and what it's giving us right now. So unfortunately, right now, I've had to shift more to 1 to 2 hour trades, which have played out great. And if you've been trading commodities, they've played out great too. But even trading something like oil, if you're really swinging it, you have to have pretty good mental standing, I like to say, because if you're swinging those, you might open up one day down 10% on your options, depending on how much money you have in that, and then the next day open up 20% higher. You know what I mean? So it's just a constant seahorse up and down. So that's really where that comes in. And I think a lot of guys that I and women that I come across in the trading space right now, they're more on, a lot of day traders don't have that mentality of willing to hold through a loss, if that makes sense. So if they get down 5 to 6%, they're like, okay, this is turning bad. I don't know what to do, and so on. And they start to panic sell. And we see it time and time again with Bookmap. Is if you just watch those levels, and it's hard to look at big Bookmap on a longer period of time frame. It's more of a day time frame. It's a day tool for me, like a day by day base to see how you're moving throughout the day. But coming into that, it's just you're gonna get affected by that. And again, it's just so much uncertainty. And something that I always am telling everyone too is the war may be bad for the market in the short term, or we may have some good news in the short term for the market, right? But the worst possible thing for the market is uncertainty. That's what's going to guarantee us downside, in my opinion. Is every time you hit those levels, you're going to hit these levels of downside every time more and more uncertainty comes out into the market. And unfortunately, that's just where we're at right now. So to answer that, these lately have been anywhere from 30 minutes to 2 hour long trades. I typically have not been going longer than that for the since the beginning roughly of 2022.
Okay, and then before that, you were holding for like multiple days.
Yes. So another thing that comes in with that is what is your risk tolerance and where do you kind of draw the line for profits? Because like I was saying with growth, you were seeing massive levels of gains
Right.
in a day. I mean, you could get into a Square and they could just have a $20 day, which is kind of insane. But they were just running like madmen. Or you'd get into a great example in 2021. If anyone knows about Neo, you bought the stock. It was at $4, peak 2021, peak 2022, or yeah, 2020, 2021, you reached, $65 on Neo, right? So you ran from $4 to $65 in a matter of a year. It's an incredible run. And this was kind of just the story of the market. And so when you're having options specifically on these, you kind of have to be disciplined enough where you're like, well, am I willing to take a loss here? Am I willing to, spread it out more? How am I willing to really look at this? And that's where it kind of comes down to each trader. So for me specifically, once I start getting up a specific amount, I start trimming that position every time, whether it be by 10%, 20%, half the whole trade, whatever it may be. I have to start securing those profits for myself.
Understood. Um, yeah, interesting. I mean, interesting transition. And are you leveraging a little bit more now due to the holding period being less?
So I would say not really. It's totally dependent as well on the trade. So for instance, this first trade would be a higher risk trade in my opinion. Yes, I'm still confident on was confident on Lucid dropping. But on this next trade, I was extremely confident just because the fundamental research that I've done on the company and how they're moving forward, right? And so that's another level that comes into it is in Discord. So I'm always talking about trades, or we're talking about, for instance, in a few minutes, you're going to have Biden talking about Russia, right? And so when that happens, they're saying they're going to be banning Russian oil. And for the past 2 or 3 months, I've been extremely, extremely bullish on oil. So I've been willing to overextend my portfolio heavily into oil, natural gas, any commodities, wheat, uranium, palladium, anything like that, because I understand that those are going to have great returns most likely and the lowest amount of risk. But whereas something like Lucid and growth, like I was used to trading in the last year, those have a lot more risk, if that makes sense. So those I'm putting in almost like not when I say the minimum, I don't mean I'm putting in little amounts of money. But as far as my risk tolerance goes, it might only be 5% of the portfolio into some of these trades comparative to, 20% that I might be putting in oil and gas. And another thing I want to really focus on is when I'm looking at options, I have a separate portfolio for options trading than I do from long-term investments. Those are two separate different accounts. I don't look at my long-term stuff. If I'm buying it, I buy it. I make a decision maybe once a month. I'll go check it out and just adjust those positions. But as far as options, that's more of how I'm paying myself monthly and things like that.
Okay, yeah, understood. Um, yeah, I mean, basically, kind of in a nutshell, it looks like, I mean, your style here is you're looking and reading about the fundamentals. You're looking at the stock. You're looking at higher time frame levels here, and then you're looking for your entry. And then, well, based on then you look at Bookmap and look for not only entry to support this view. But then looking at the heat map as well to understand like where you might start taking some profits.
Exactly, exactly. Yeah. And I think that's where Bookmap really shows the value. You know what I mean? Is when it comes to because if we're looking at this and we can see just on my screen, right, you have your higher lows and your break. But you don't really know where you should be getting in, where you should be getting out. So for example, you break below this, you come in, you test $24. Everything tells you that you have a bottom there and maybe you should be getting out. But you come
Right.
back up and you can see the liquidity zones once again on Bookmap, and they'll show you that you're getting large sell orders at this level around 23, 24, 3. and you're pushing back down, and then those levels start to disappear, which shows you more downside is coming. And that's something that you're not going to see on these normal charts, right? And so that's where I think the real help comes in from Bookmap. Like we looked back here, you can just see those levels just start to just disappear, right? And they start to come back down to those key levels around 23.7, 25, 23.5. And that's where you start to see the value of Bookmap because it gives you just more confidence into those trades to see, okay, it's moving the way I wanted it to. You have sellers are stepping in. That's where it really comes in. I think it can be a little bit overwhelming at first, but once you just start to notice and use the information of, okay, sellers are stepping in, buyers are stepping in, that's the big part there.
Yeah, yeah. No, no. I mean, I love it. I mean, the simplicity and the clarity. You know exactly what you're looking for and what you're doing, and where to get in and where to get out. And just that kind of having that kind of clarity. I mean, you know, we have advanced webinars every day in our education, but just trying to keep it simple. Like, don't be overwhelmed by it. And you know, just a few different things, and you're looking at, and you're looking for this to play out in a specific way.
Yeah, exactly. And I'll say that too is I think people they start to put too many indicators and they start using too many different tools when it comes to that. And if you look at my chart, honestly, there's no. I mean, I have the VWAP and I have the AMA. That's it. There's nothing real in the daily, monthly, and weekly opens, but those aren't really indicators. That just shows me where price opened up for the day. And so I think less can really be more when it comes to this, and especially if you're using Bookmap. If you're using Bookmap, I don't think you should be using 30 different other indicators. You know what I mean? Because it's really going to sort of cloud your judgment, and you're going to miss things that are right in front of you. You know what I mean? So when we come back to this again, it's just openly clear that when you're getting that bounce on $24, that you are getting constant rejection right here at 23, 24.35. You see what I mean? One, two, three, four, five, all within a span of 7 to 10 minutes, right? And so what that's telling you is that this is going to continue down unless you, you know what I mean? And you don't even have a level of resistance there. So that just shows you how weak it is. You know what I mean?
Yeah.
And I think when you have, you're looking at your MACD, your RSI, or all these other indicators, it can just make you just start leaning towards things that kind of don't matter. I'm not saying those indicators are bad. I'm just saying you start to cloud your judgment of, you start taking in factors that maybe aren't as important when really the price is telling you exactly what is happening. You know what I mean?
Yeah, absolutely. I mean, like, it's kind of repetitive in essence. Like, we keep kind of saying the same things. Like, the things that are on the bookmap chart are very, very simple and straightforward. And that's what most traders like about it, is it looks overwhelming, like you said, but all it is showing you price action with best bid and offer, the transactions on that best bid and offer with the volume dots, and then the heat map is just showing you the evolution of the supply and demand, where they want to deal, and that's it. I mean, there are other indicators on there, but for optimizing some of that, but is very straightforward, and that's kind of the beauty of it. It's not trying to tell you overbought or oversold. Just look at it. you
Yeah,
know
no, exactly. And in the next one, I do use absorption, and I've used the what's the other one called?
Sweeps,
Yeah,
the sweeps.
yeah. I haven't really used the sweeps as much. The absorption's the really big one because, for example, like looking at Lucid right here, typically absorption would pop up because you'd be getting some bigger
Hmm.
orders at this level, but for some reason on Lucid, you just weren't getting those. It's a different type of trade, I guess. But like when you come over to Moderna, right, and looking at Moderna, this was eye candy to me. This is something I've been looking at for weeks. I've been waiting for it, and it just got the perfect example of an entry. If you don't know, White House downgraded. Sorry, um, COVID from I guess like the highest level of a national emergency. They downgraded it like one level. So and that was over the weekend, and that was kind of shoved underneath the rug that no one's been talking about. And you've seen insiders on Moderna selling nonstop. You've seen um, the earnings weren't good. They did have like some buyback, which in my opinion did nothing for the stock. But now you're finally getting that break below 138, which was a key level. And then this is where things got interesting. So looking at that entry at 138. right? So we come over, and this is where I love absorption. So I hate that I can't zoom in on when I'm using the presentation, the
Right, right.
slide.
Yeah.
But you can see, so I set it for about 10,000, and you'll have to tinker with absorption because sometimes you'll have to like zoom in or zoom out, and it'll just make them disappear, or it'll lump them in. So like right here, I think I put it to like 5,000, but when I zoom in, it's like three different orders, right? So that's what you have to look at there. But how you're moving is, again, you can see this 138 level, and so everything tells you is that yeah, you dipped that morning because if you come back to that chart, you can see this is how you opened up for the day, and this is where the weekly was. So you closed Friday right here at about 137, and then you opened up really low at about 135, and you trended up for the first, I guess, what is that, like 10 minutes of trading right there to 138. And so if you're looking at this, you would think, wow, Moderna is moving good at an open. It might be a bullish day. But when you come over to Bookmap, you show the clear rejection of that 138 level, which we already know is a major level. You have a liquidity zone here, which gets hit once, but it disappears. So this might tell you might continue. But then you see another absorption level hit here. And when that hit, I was like, oh, this is an entry. This is an obvious entry. Because typically this will lead to like a reversal, right? And so you hit there, so I entered right there. And so when you come back, again, it's just very clear to look at when you look at the chart. You can see you hit it a few times. So that's the first one here. The second one's right here. And then boom, you just get rejected extremely hard. I mean, this is a 1 minute time frame. So you're saying 1, 2, 3, 4, 5 minutes. Within 5 minutes, you're down from 138 all the way down roughly to 134, a $4 drop. And when you come in here, you can really start to see those levels once again with Bookmap. And with absorption too, this is one thing you kind of have to start training yourself to. For myself personally, is you'll start to see when you start free falling, you'll start to see a lot of those come in because at that moment it's just sellers either coming in or trying to buy it up. And right here, sellers are just getting out of the stock as it starts dipping. It just starts triggering all their sales as you come in. And your first level is going to be that 130, just a mental level. You come down, you hit that green level buy, which signals typically a little bit of a bounce. But then once you hit that level again of that, you start flatlining, and then boom, another sell order, which indicates just more downside. And from there, it's just a stair step. It's just boom, boom, boom to the downside. And one thing I will say with absorption too is I mentioned that sometimes you won't come down to those levels you're watching out for, right? And absorption will do a really good job of this. And so I minimize the level of what it's going to signal to me. So I put it at 5,000. So you're going to see more orders. Typically, if you do the average, it'll give you a higher number. Like it'll tell you the average of the day of how many are being traded. So this might have been closer to 10,000. But right here, so I wanted that so I could really signal when the bottom was going to come in for the day. And so what happened here is you started to see all these buys and not that many sells, right? So you started to see all these orders coming in right here. But literally in 1, 2, 3, 4, 5, 6, 7, 8. 8 orders came in before one major, reversal signal. And that to me was a signal. Was like, I need to just get the hell out of this right now. And so when I started to get out of that, it was just easy pickings from there. But a key thing too is I know a lot of people like to I personally, for myself, if I trade something, I try not to trade it again for the same day. That's just a rule of thumb for myself. But you'll come in and see that these levels will continue to be respected, even sometimes when there isn't necessarily a level there. So 130. So just remember that 130 marker here. And as you come over, you can see we just extended that 130 level right here. And so you started again, you broke down below. You came down to that 126, 127, which you already had marked out, got bought up, and you came back up to that 130. And again, you broke below it later throughout the day. And that would have been your entry to get back in once you broke below it again. And once you broke below it again, you retested 126. So you had that opportunity to continue to trade this, right? If you're watching those key levels. So that's things you got to be paying attention to. And again, that's just something I hate retrading the same trade multiple times over the day because it leads to just bad things for myself. But ultimately, that's another key thing that I'm watching there as well. But this gave a really good example of that absorption indicator, and I think that's my favorite one for sure is the absorption, just because it's gonna really help you out too whenever levels may start to disappear. So like right here, if I'm just going by how I typically use Bookmap, this is going to tell me that you're probably going to continue up to like the next zone of 139.5, maybe 140. However, in hindsight, you see the absorption kick in and boom, you're double topping and then you're hitting back down. So that's how I was looking at it. And you weren't getting any big buys at that level either, which is a very important thing to realize as well.
Yeah, beautiful, Tyler. I mean, like, yeah, I mean, here's what you got. You have fundamentals. You have a move up to the upside there into high liquidity. Here's a retest, and they can't even break it. You know,
Exactly, exactly.
so yeah, no, beautiful, beautiful stuff. I love it.
One sec. And then, so basically, the main points that I will say for anyone that, I mean, obviously, everyone here has Bookmap. So if you're using Bookmap, because a lot of people in my Discord as well, they're using it through TOS or whatever platform I don't know what they're using it through. I just I just stream what I'm using and they just do whatever they want. And so, but I'm getting a lot of people, sending me screenshots of it. And basically, where I've come to the point I'm using it is one, the historical importance, which we mentioned in Moderna, right? So if you want to get back into a trade, so let's say I missed out on Moderna. Let's say that I didn't catch this first drop here and I wasn't trading it, right? So I didn't get in up here and I wanted to just re-get in this because one, we knew the volatility was good. The liquidity levels were being respected. Just looking at that, bookmap levels, we already saw that. So if I wanted to get back in, once you started to break below this 130, 129.3 level, it would have told us based on those historical levels that you're basically having just free falls all the way back down to 126, 127. That's why you're not getting any bounces here. And this is going to be an easier chart to look at compared to Bookmap because it's a 1 minute time frame. But you're seeing it's just clear shots of liquidity straight down to that support. You're not really getting any love, and this is one of the big values of it. So even if you're missing out on that, this was the trade of the day, right? Catching here to here. It doesn't get much better than that. But this is still a great trade if you're trading options to get in and out because you're literally moving within 15 to 30 minutes from 130 down to 127. And if you trade in Moderna, the stock moves great with options specifically. And then going into the second, I would have to say the absorption indicator. If you're treating it somewhat to key levels, again, it'll trigger that reversal like we mentioned in Moderna, right? So just going back here. So even if, like I said, if you're looking at this without the indicator, it might tell you, okay, we're probably going to continue up. It's not maybe the best trade. I'm just going to step out. But if you keep watching again, that absorption is going to step in and almost react at the same level of that indicator. And that's things that I have to be watching. And yes, it's going to be meticulous. It's going to be you're watching the same thing over and over. But then again, you get to realize this is happening within a matter of minutes. You know what I mean? So this is happening very quickly. So that's the big thing there is learning to just adjust to that. And you also have to recognize the difference of sometimes this might hit and you might continue up a little bit. It's going to happen, but more times than not, statistically speaking, I believe it respects it and starts to push back down. And you also need to make sure that your absorption indicator is set to the right standards. So if I'm setting this at 500 lots, obviously it's not going to be as respectable on something like this stock because I bet all these are about 500 lots. You know what I mean? So those are things you got to be looking at. Make sure it's not overvalued or overly used throughout the chart, right?
Yeah, yeah. There's the automatic, standard deviation setting in there that you can use, and then you can play around with uh, you know, the multiplier on that standard deviation. So I mean that one gave you just a beautiful reading there. Not only did the top there, like you can obviously there's going to be absorption there because of the heat map, right? The second one though, high absorption and probably an iceberg or something else in there, because you have another pretty high reading on the absorption, and there's not much liquidity there, you know. So there's your,
Yeah,
I mean, just it's a beautiful reading right there. Double
yeah.
top. Yeah. Anyway.
Yeah, so that's the really big thing there, and it takes some time to get used to. And like I said, with absorption, sometimes you'll go to the average, and it just won't show you enough. Sometimes, so you'll have to tinker and just nudge it down just a little bit to see where you are. But you just have to make sure you're not pushing it to give you the data you want it to give you, if that makes sense. And that's why I liked it right here, right? So like, yeah, you're getting a lot of information here. This is a lot. The comparative right to the beginning of the day, there's four here, and then within this time frame, obviously you're getting massive amounts of this. But I was setting this up to see when a large sum of those buyers start to take place, so I could signal that bottom for myself, right? And that's where I got that signal right there. It's like it's time to start cutting this trade and getting out of it, just based on the amount of people stepping in right now.
Wow.
And so that's how I'm using that specifically. And then obviously, this is where it comes in again with using absorption. I think it helps you out tremendously with learning to start taking are cutting those profits, right? And so when I say right here, and if you breach your prior level, the trade is most likely over. So for example, and this is going to give you such a good viewpoint of just how you're moving back. So if we're looking here, you have that obviously that double bottom made there. I didn't have a picture made, but you can see how it starts breaking back above 128. So you have this region here about 128.5. This is an old level, and you can see that you're just moving up even without the absorption. You're moving just clearly to the upside through that level. So in my opinion, that's telling me this trade most likely is flipping the overall trend in the shorter time frame. And if you're in options, you know time is really not your friend. So once you start making money on a trade or anything like that, you need to start making your decision soon because implied volatility starts stepping in, data starts stepping in, and that's going to really start hurting the value of those contracts. Where if you get up 60%, 5 minutes draws out or 20 minutes draws out, and you say the same price, you might move down to a 50% profit instead of a 60% on that trade. So these are things that have to take into place. And again, this is why you're getting into such low time frames on Bookmap, and it's telling you, okay, this is what's happening in the levels. So where buyers are stepping in, you might trend sideways, you might start pressing back up. And so once you start breaking back above that level, I'm just like, for me, it's just over for me. So you come to the chart, you can see you start breaking back above, and guess what happens? You push back to 132. At that point, your profits will be cut in half, and then you trend sideways as well. You know what I mean? Now, I couldn't have predicted with Bookmap that you would get rejected this many times and go down here, but I could have gotten a reaction from Bookmap once you started breaking back below the VWAP and breaking back below 129, 130 to say, okay, this is a good time to maybe play the trade once again. If that's how I'm looking at it.
Right, right. No, it's funny. That's kind of it's a funny thing. So once you make your money in one, like you don't go back to that stock again. You move on to another one.
Yes, I really try to not repeat, unless maybe it's a spy, unless I'm doing that, but I don't even like to use Bookmap with the spy. Like I said, ES, I think me and Bruce have talked about this as well, is ES is going to give you a better viewpoint than I think the spy and the Qs will. Qs are okay on it, but you're seeing a lot of algorithmic trading going on with the SPY and Qs, and that really hurts the data you're giving. But ES is really where that's beautiful for trading those.
Yeah, yeah, agree with you on that. Interesting. And it's mostly. I mean, you're not getting into the underline. It's mostly options that you're trading here.
Yes, so yeah, for right now, that's what it is. Again, because for me, yeah, you're getting value on some of these stocks. Like if we look at, for instance, the big statement I've been telling everyone is if you look at your growth stocks from the peaks of 2021, for instance, Netflix was at $800. Netflix is now around 350, high 300s range, I believe. It could be even lower. Square was at I think 311. PayPal was at 390. Those are both near $90 each. So you're seeing these high growth stocks get pushed down almost 60% roughly. But if you look at the indexes like SPY and NASDAQ from their highs, for some reason, those are only down 10%. And I get it's a cumulative of more than just four stocks, but if you look at the whole market, everything's getting hurt. The only stocks that really aren't getting quote unquote hurt is going to be Apple and maybe to a certain extent Amazon. You have Tesla down from 1250 actually, down to sub 800 right now. Again, that's over a 30% drop right there. You have Facebook, obviously, we all heard about that Facebook drop, down immensely as well. You have all these major stocks down, but SPY and NASDAQ are showing that the market hasn't pulled back that much. So in my opinion, what that's telling me is that one, you probably haven't found a bottom. Two, interest rates probably aren't necessarily fully priced in, which is as much as we like to say that. And then also we have Russia, Ukraine going on, which Lord knows what that leads to. And so that just tells me one, there's uncertainty, and then two, it's probably not the best time for buying on value. Now, is it good to start your positions longer term? Yes, maybe. You got to make that decision for yourself, what stocks you like, things like that. But ultimately, it comes back down to my risk tolerance in the market, and do I believe there's more downside, and do I want to be cheap, and do I want to wait for a better bottom?
Yeah, yeah, yeah. Makes sense. Makes sense. So as you had said, this is your investing. Well, there's a difference between your trading portfolio and your investing portfolio.
Yes. So when it comes to longer term investments, I do not treat them at all as options or anything like that. So if I'm looking at, for example, I bought the let's say I bought the Facebook dip, right? Facebook, it dropped down from, what was Facebook? I can't even tell you what Facebook was at. Had to have been, it had a massive drop. We all know what it dropped. Let me look really quick on my phone. That I did buy the dip on Facebook. So Facebook dropped from on its earnings from 324 bucks down to roughly 240. And so I ended up buying some around the 218 mark. Now, when I start adding it to my long-term portfolio, because it's down from 218 down to 188 right now, I'm putting that in the portfolio and I'm not looking at it. I'm not worrying about more drops. I'm not looking how much I'm down on it because I own that stock. It's not like options where I have a date that it's not mine anymore, or I have to exercise it, or I have to do this or that. It's not a long term. It's not a long term position, right? It's a total. It's not like I need to make that money right now. That's for the foreseeable future. That's just down the road. Whereas options, if I'm buying a Moderna position or if I'm buying a Lucid position, I have, for instance, 2 weeks on those positions, and it's I have to make a decision. What you know what I mean? And so it's like you have to look at how much you're up, and also I'm not gaining or losing 100% on a stock play in a matter of a day or two. So those are things you have to look at, and that's the difference. And I think that's the hardest part when it comes to trading is the emotional aspect, and being able to really control those emotions in trading. And when it comes to long term, you can't have any emotions. You have to just have your facts and what you like or what you don't like. You know what I mean?
So and most of the, I mean, these options trades, like these are all directional trades, or are you doing any sort of spreads or any kind of I don't know, anything else?
So I'm not doing any spreads or anything like that. I will have hedges on my position. So if I'm going heavy into, for instance, during 2021, if I was going heavy on growth, I would have hedges with maybe, I didn't love SPY puts, but I had UVXY calls if it was coming to a sketchier time. And I think that's what you're seeing really from funds right now. If you look at the flow of money, I use personally, I use a service for some of the options flow, and I don't trade based on that, but I think it gives you a good sentiment of how the market's viewing the overall economy. So going into Friday, we saw an absurd amount of calls coming in on VIX, the volatility index, basically that moves counter to the economy, right? So if SPY goes down, VIX goes up. And so you saw just a crazy amount of buyers coming in for VIX, and I think that funds now are heavily extended into VIX and SPY puts to kind of mitigate their positions right now. But in all fairness, we were told going into the beginning of the year by Morgan Stanley, JP Morgan as well, that the most traded index or stock or whatever it was going to be these the volatility indexes. And if you look at what's happening, the VIX, UVXY, or VXX, whatever you want to call them, those are your most traded options basically on the year. I mean, there is thousands of them coming in every single day, and that's why VIX is sitting currently above 30 bucks right now. And it's absurd to see, but that's how I think big money is adjusting and mitigating positions to the long side. Because I think they always have to be adjusting long positions, and they're just buying dips. You just have to as a long term investor. But I think that's how they're making money somewhat in the short term as well on these dips. Because if you think that some of these funds are just completely losing money on this free falls, then I think you're sadly mistaken. Unfortunately, I just think that's just the way the market works. Is they're hedged either way you go, and I think that's how they're hedging personally. But no, for me, I'm not doing spreads because it's so volatile as well. So if I'm doing a spread and I'm trying to, estimate where they're going to hold that price at or something like that, it's not likely going to happen because if we're looking at any chart, you're getting huge pumps up or massive drops to the downside. And again, with all the uncertainty, it's just not worth it in my opinion right now.
Yeah, yeah.
And again, you see these trades are so I've just minimized the amount of time I'm putting into these as well. So it's not like I'm holding them overnight or losing sleep over them. You know what I mean? I'm making the decision every single day to get in or get out.
Yeah. How many trades do you take a day in general? Do you think?
Yeah, so that also will. That's probably one of the biggest questions I get, and it's very relative to the market. And I would say that as of recently, tops two. I'm usually not going over 2 trades a day. And people were like, well, how are you making money with that? I'm like, well, if I'm putting, if minimum I'm putting into a trade is about 2,000 usually for myself. So if I'm making anywhere from 10 to 30% on a trade, that's perfectly fine for me. But then you have your big plays, something like oil or your commodities like wheat, or you saw nickel today go just absurd. Nickel just went mad today because you're having these decrease in productions and all this stuff going on, and you're having these large runs. You don't have the need to over trade. And I think over trading really too. You're statistically, when you come in, you're probably gonna lose. You're gonna lose trades. And if I'm winning, I don't. It's not like it's the gambler's fallacy of, oh, I'm hot. I'm not gonna lose the next trade because I won the past three. That's not how it really works. And chances are, if you keep coming back to the table and keep taking more hands or keep taking more trades, you're just getting a higher margin of error because you're just opening yourself up to more risk and more trades throughout the day. So if I come into the day, and I usually will map out what I like coming into today. So yesterday I came into the day and I was like, look, I'm only trading these four commodities and Moderna. Those are the only things I like. That's all I like. And I ended up taking, I believe, a wheat position, WEAT, and then I ended up taking the Moderna position early in the morning. And then today I came into the market and I was like, commodities are on the table again because they're dipping. And then also I like Apple because they have the Apple event today at 10:45, or I think maybe it's 12 Eastern. So that's another thing because Apple's going to get high call volume. So if I'm interested in the SPY starts to bounce, Apple's going to be my go-to play because Apple's clearly going to get that volume because they have an event going on, and that's going to be the only type of equity that I really like in the market right now. So that's how I look at it there. And you just have to recognize that you're not in the same market that you were 6 months ago. You went from a perma bull market to, you hate to say it, technically speaking, you're in a bear market. You're in a type of quote unquote recession. Just that's not me saying it. That's the hedge funds coming out with the data saying technically since the Nasdaq's dipped 10% in 2 months, you're hitting that you're hitting that level. You know what I mean? And I think that just comes to the point of recognizing where you're at in kind of the cycle.
Yeah, yeah, yeah. No, it makes good sense. I mean, like, I love the fundamental work that you're doing, and then looking at your bigger picture on the chart there, or just on the day in general, and then looking at Bookmap for the really kind of slicing into the position. Simple and straightforward and highly effective.
Yeah, and again, like I said too, I think the biggest thing, even with myself, because it took a long time for me to mentally come to the place of making a decision, being firm in that decision, and being confident in the trades too. Is you try to use too many things at once. You try to use too many indicators, too many different. It's like having a whole bunch of voices you telling you what to do, because sometimes those indicators might contradict each other, or they might contradict the worst case scenario is they have an indicator that contradicts your price action. So at the end of the day, for me, price action is end all be all. If I'm looking at how buyers and sellers are adjusting their prices every day, that's the biggest thing for me. Nothing else is really that important for me. That's going to be the key signal for me to buy or get out of a trade. And so that's where I think the other ones come into play of they can kind of start hurting you. Now, do I have the MACD? I have it, yes. So when I'm looking at smaller time frames, I use it occasionally. But they have their place, and you also have to know where, you know, they don't have their place, if you will.
Right. Yeah. No, absolutely. I mean, like, we try to kind of say the same thing in our education, that really what matters is understanding exactly what that indicator is doing. But look at the price action, look at the order flow. If the indicator supports this direction, great. It's a confluence. But looking for signals off of an indicator like that is very dangerous. We feel. But I have a question for you about your settings that you might be using on your absorption indicator, how you kind of fiddle with that and find a proper setting for it.
Okay, so if I come over, like for example, with Apple, I was looking at it this morning, and so yeah, this is the part where I think it really comes down
Oh,
to
hold on a minute. It looks like
liking what it's given.
It looks
So I
like
can only.
we're not. I'm not able to see.
Oh, okay. One sec. Let me adjust. On on Discord, you have to adjust the screen. One sec. Change windows. So it's not going to let me give you the access to the bookmap screen and the add-ons. So
Here,
you won't be able to see them both at the same time.
I could probably show mine here. And maybe you can go through it if
Yeah,
you like.
I can just guide you through it.
Okay.
How I look at mine.
Okay. So yeah. Anything in particular you want to look at? Maybe Apple.
Yeah, we can look at Apple.
Okay.
Apple's fine.
Okay. So yeah. Hold on a minute here. Let me. Yeah. We had Brent Kachuba. He's an options expert, and I want to show you this indicator, Tyler. So it's the hero indicator, also some levels that you might be really interested in. I've kind of shied away so far on it, but yeah, I'm looking forward to showing that to you. The Let's go to absorption indicator and take a look here. All right, so yeah, you can see they're all over the place in here. You're getting a lot of different signals in here right now. So what is it that do you typically kind of look at here?
So let me pull up your screen real quick. Okay, let me full screen. Okay, so it's like the settings a little bit. There it goes, it's cleared up. So I'll go up to the top. I really won't mess with anything except the greater than or equal to X amount of shares.
Okay.
So it's 7218. So I'll go to automatic and see what it gives me. So if you click automatic real quick. Okay, so if you zoom, exit out really quick, or move the add-on screen to the right, if you don't mind.
The add-on screen to the right. Oh, okay. This way?
Yeah.
Okay.
So if you zoom into that top level, right when the trading day started, you
Here?
can zoom in just a little bit. Yes.
Okay.
Or will it not let you because you have your add-ons? I don't know if it'll let you.
I'm sorry. The high here in Apple for the day?
Right at the bottom liquidity zone, right
Oh,
below that zone. No, so
right,
at the
right
yeah,
here.
right there, right.
Okay.
Yes,
Uh-huh.
correct. So if you're looking at that, it gives you kind of a lot. Can you zoom in just a little bit or no?
Sure.
So it's if you can see that one that zone starts, it's very similar to Moderna, extremely similar to how Moderna ended up playing out. So you can see that you're getting those orders right there at that level,
Right.
which you go through that resistance, that big liquidity zone block, right? And as you scroll to your right a little bit, so Apple's giving you great, in my opinion, great. I would probably up the amount once it starts giving you that many, because I want to start seeing the bigger orders. So who's taking sides on that position? If it's either buyers or sellers or dominating, if that makes sense, at those highs. So I'll put it automatic real quick. Will automatic adjust it or no?
Yeah. I mean,
Automatic will select.
it's already kind of done it with the standard deviation here. We can bump it up here, the multiplier.
Yeah. So you want to make it less. So where
Oh,
there's less.
yeah, yeah, right. Understood. Okay. Maybe that's
Yeah,
not.
and so that, in my opinion, that's just telling you that sellers see, and then as you get into that range, you're seeing the sellers are just winning out this position here. But that's where it comes back down to sometimes you have to be looking at it's so because there's so much that goes into it as well as far as looking at SPY and looking at how the indexes are moving and fundamental news as well. And like right here, this is showing you because I was looking at this more before I even came into the live. I was watching Apple and I had SPY pulled up. Even with SPY dipping, you're seeing a lot of strength on Apple. I mean, I think like even with right now, you may see yes, you're getting some sideways action, and you're seeing more sells, in my opinion, here than you're seeing buys, which will side with the downside. Um, I think that you're still pretty bullish that you're holding up at this resistance. But again, you're seeing that absorption level start to really maintain, even if it's a little bit below that key liquidity zone you have on your left, where that first 89,000 order was
Yeah.
at like 159.8. Yeah, right there. You're still seeing that the next one, the 13.6, pop up on your right hand side a little bit below. You know what I mean? And so you're seeing those big orders still coming in right at that range. And so scroll to your right just a little bit more. And so this is where you start to lose it, in my opinion. And so when you see that next order, you start to see that green buy. I believe it's someone. I'm filling up one of those sell orders. So basically, it's a fill on someone's position. So you get that little bit of a bounce, but you're just not getting any follow through. And those bubbles, you see the size of them
Yeah.
that are on the bounce that you saw from the green dot.
Right.
On that, yeah, that small bounce you get from basically 159 to right there, right above your ticker. It's so small. You're getting no actual volume. And that's just the indicator to me that it's just you're not getting it and it's just going to continue coming down. So as you're also looking at the absorption is going to tell you the key spots to look at and then watching how you're moving from that key spot that if you're following. So I'm looking at that key spot where you balance that 10,353 buy right there and you're for the next 30 seconds, right? There's no additional volume. There's no additional buyers stepping in with you.
Right.
And that's just telling me. And then as you start moving down, look, more sellers start taking place. And then from your next one, the next buy, 11,000, you start to get some help. But then as soon as you start to top off and move sideways here, another seller takes in and boom, you just keep pushing down. And it's just, and then at that point, you have to say, well, you're probably going to come down to that next liquidity zone, 158, and look what happens. More of your big orders start to take place after that, and then it's just downhill from there. But if you're following the SPY as well, the SPY was just this whole morning was bleeding. I mean, you got some bounces, but it was just brutal this morning watching it.
Yeah. Yeah. No, great stuff, Tyler. I mean, I love it. I mean, it makes total sense, the clarity in it, understanding the volume, context here, after the absorption event up here. You're reading in the weakness, just looking for these, bigger liquidity areas to test.
Yeah, and again, like they're not necessarily a buy or sell signal looking at the absorption. It's just an indicator of you need to be looking at these zones and what's happening and what's taking place. If you're following there, you know what I mean?
Absolutely. I mean, that's the key. I mean, it's just understanding the context, instead of like, oh, this is a signal. It's like, well, here you see 10,300 here, but what was the reaction? What's the context to it here, right? It was totally muted. So we see the move to the upside here.
Correct.
Yeah. Um, okay. All right. So it looks like yeah, Tyler's got to go here. It's in just about an hour, and thank you everybody for coming. This was really great, Tyler. I mean, we'll do more of these in the future. Hope you're interested. We'll do some
No,
more
no, and
with
if
you.
if people have questions specifically on anything, they can just tag me in the Discord, just at me in the Bookmap Discord. If I don't answer immediately, I'm probably just caught up with something. But I'm usually pretty good at getting back to it, and I don't mind answering
Okay,
quick questions
and
if
and
possible.
yeah, Tyler's information he is all in the description there, on the YouTube channel or on the YouTube video. So you'll see it in there if you're interested in following Tyler, and reaching out to him. Yeah, this was excellent, Tyler. Very 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 good. Thank you very much.
Awesome. Yeah, it was good talking to you guys.
Okay, all right, take care.
Have a good one.
Bye.